Release. Yay, we're here. So, as you may know, my name is Katerina, and today me and my colleague Michael, who will join me in a second, are here to discuss the UK CPI data for you. Let's just set the time. Just a second, I'm sorry. Like that. So let's start. So we just a second, some kind of mess here. Right. So as you can see on my screen, at the current moment the forecast stands at 0.3%, while the prior was at 0.2%. And let's also take a look at the historical movements of the indicator. And talking about it, I would like to remind you that the CPI measure of inflation has teetered between minus 0.1% and plus 0.1% over the past year, straying into negative territory in April, September, and October, as you can see on the graph. It is currently at 0.2%. The price of oil fell by 2.6% last month, but economists predict it will help to drive the inflation as fuel price deflation eases due to heftier falls in January last year. So UK inflation rates edged up 0.2% in December, rising for the first month since January. The main rise occurred in transport costs, particularly in airfares, and to a lesser degree motor fuels. While alcohol, tobacco, food, and non-alcoholic beverages prices declined, house price inflation, which is not included in the CPI index, surged 7.7% in the year. However, despite this rise, CPI remains at historically low levels. But at the current moment, inflation is expected to hit a 13-month high. The consensus of the Consumer Price Index expects a 0.3% rise, as I said before, but economists are eyeing even a bigger jump of 0.4% overall as low oil prices lift marginally and edge up the cost of living. So let's move on to the experts and their estimates. Of course, we have here experts from different banks and institutions, number of them. So, according to their views, we have the Bloomberg survey summary, and it says that median estimate stands at 0.3%, average estimate stands at 0.36%, high estimate at 0.9%, while the low estimate at 0.2%, and the number of estimates has reached 34 this time. So, here I have also a couple of quotes from different experts around the world. For example, Howard Archer, the chief UK and European economist at IHS Global Insight, is expecting inflation to come in ahead of consensus of 0.4%. He said that January's rise will reflect the fact oil prices fell much more sharply in January 2015 than they did in January 2016. And then he added that there may also have been a reduced year-on-year fall in food prices in January, while economists at Capital Economics are also expecting inflation to hit 0.4%. They say that overall inflation looks set to continue rising in the coming few months based on our forecast for oil prices to gain a bit of ground. Inflation should be back at around 1%, they say, in the third quarter of this year. However, the path back to the 2% target will probably be a long one, and I'm pretty sure that it's going to be so. And also, the Bank of England targets of CPI inflation rate is still 2%. Let's move on to the Dukascopy community member sentiments, and I will shortly say that this time our traders are more than bullish on the cable, so at 62.5% versus 37.5%. And of course, we have a couple of comments as usually, but I'm not going to cover it because I have to pass the floor to Michael, who will roll in with the technicals. Please.
Thank you, Kate. Hello, everybody. So, for today's data release, we're discussing the UK year-on-year CPI, and of course, we have the cable currency pair, the sentiment for which is quite bullish at 58.33%, and the sterling is being bought in the majority of all cases, namely 55.84%, while the US dollar is being sold in 45.78% of all cases. Concerning the pending orders, both in the 50 and 100 pip range, the majority is to purchase the British currency. In the 50 pip range, it's exactly 60%, and in the 100 pip range, it's 66.67%, namely two-thirds. So other market participants are also bullish, or mostly bullish, on the cable, with iron having 59.11% of traders holding long positions, and Dukascopy has also two-thirds of traders holding long positions. The Saxo group, however, has a bearish sentiment of 58.29%. So if we move to the market reaction table, where we can see the market reactions for the previous 5 CPI releases. For the cable, the largest reaction was 36 pips in the previous 5 months, while the smallest one was only 15 pips. And based on these reactions, we could expect an average run today of approximately 28 pips. So, based on this reaction, we can also set the take profit and stop loss levels accordingly, with the take profit level located when I first set it was at 1.4528, although we do see the price go lower at the moment, so we might have to adjust that within a minute. So the take profit level was quite close to the upper Bollinger Band, which was fostering this resistance, while the stop loss level was close to the 4-hour R2, and we also had the 20-period simple moving average, which has also moved since then. So the support is slightly less strong, and let me just adjust the stop loss and take profit levels. So we will have the stop loss at approximately 58, so somewhat close to the daily pivot point, and hence the take profit level at 14. So right on to almost on top of the daily pivot point, and we also have this trend line passing through, which is a trend line that kept the pair from rising further for just over a week now. So this is a level to consider. Once the data is released, it can also prevent the pair from going higher today, specifically after the data release. And finally, the technical indicators, which are giving us mostly neutral signals, with bearish only in the weekly and the monthly timeframes, and the bullish signals in the 10-minute time frame. But the most important one is the 30-minute time frame, specifically for the approximately, well, not approximately, but exactly 30 minutes ago. So we should have the data posted in approximately 5 seconds. Also, other market participants expect the data to fall in line with expectations, so we might not see a strong reaction, but we already see the pair go to the downside, so I'm guessing something came out worse than anticipated. But we only see a reaction of 18 or even 19 pips, lower than the anticipated 28 pip reaction. So once we have the data posted, because yeah, we can already see that the year-on-year CPI actually fell in line with expectations, while the core one was slightly worse than anticipated. But what actually disappointed us was the month-on-month data, which was worse than anticipated, a lot worse than the previous one, and worse than the forecast. Hence, we see a bearish reaction. So that would be all from my side, and back to you, Kate.
Thank you very much, Michael. So guys, you can still see the reaction on the screen as well as the data in the chat section. That is more or less in line with expectations. So from our side, I guess that would be it for today with the data releases. But don't go away because we have a number of webinars prepared for you today. Definitely stay here, stay with us, and follow the schedule. Thank you very much, and bye.